Anne Randolph, Director Sovereign Risk Analysis at IHS Global Insight, joins in from London. And on the phone line, we've got Peter Cardillo of First Standard Financial. All three of you, gentlemen, thank you so much for taking time out for us. Peter, let's begin by understanding that despite the fact that, you would imagine after all the soothing talk from John Osborne and, Mr. Cameron himself, we've only seen a relentless sort of sell-off in markets today. What's leading to this renewed pressure, and what's it going to take to, be able to arrest this fall, you think? Peter? Okay, I think we'll have to fix that line with him. Let me actually ask you that, Chakri, then. What's your own assessment? You actually sat through that entire speech that, David Cameron made in the House of Commons. Tanveer was making a point about how at least the sense one gets in London is that, there is some time, and it could even take something like 2 years for the UK to actually be able to detach itself from the EU. And yet there is this sense of panic and worry. Why is that?
I think it comes down to the markets don't like uncertainty, and right now we're going to go through a phase for the next 3 months where they decide, at least come up with a plan of how the exit is going to pan out over the next 2 years. And I think that's one of the big reasons. And second is how the regulations are going to work out for various sectors such as banking and many other sectors which all have, because of their EU status, can passport themselves from one country within the EU into the other, and all that is going to change in 2 years from now. I think this uncertainty is something which is taking a toll on the markets.
All day today and over the weekend, we did, slice and dice and analyze the possibilities of how it could actually impact the Indian market and economy. And the sum total of that was that the answer is very little. Given that, that global markets are selling off, and if we also fall in line, which are the areas you think should be good areas to really go and shop for? Because we are staring into a progress of a good monsoon. The first quarter earnings season is just a fortnight away, and the expectations are that the momentum of Q4 may continue.
One of the good things is the direct impact or the direct fallout because of Brexit of India is very small, in the sense that 3% of India's export, 3 to 4% of India's exports are to the UK. It's primarily in 4 or 5 sectors: services, IT, gems and jewelry, and some of the consumer-facing sectors. And so they are likely to see a downtick in demand, given that Europe and UK are going to go through an uncertain phase. On the other hand, domestic-facing sectors, such as PSU banks, I think will stand good chance of doing really well, given that they are important sectors for the Indian economy.
Ian, what are your thoughts on the way pound is being pounded, almost 2–2.5%, but the periphery markets, Italy, Greece, all of them have fallen much more. You lived and work in London. How do you assess the asset prices there? Do you think the chances of further damage are more, or you think that this dip will be bought into? Because some of the global hedge fund managers are contemplating purchases on this fall.
As your previous guest just highlighted, the number of unknowns here are quite many. In that scenario, there has to be a bunch of new regulations in just about every single sector. So I think the market is still trying to find its feet here. As far as India is concerned, I think the export-related sectors, yes, there is export related to the UK. Yes, there is some more downside. On the other hand, there is a indirect fallout in the sense with the pound falling, the rupee is likely to fall too, and making imports far more expensive for India. And also import-related sectors are also going to see a lower margins going forward. On the other hand, you have some of the sectors like textiles, garments, jewelry, who export to the UK, to the EU, will face lower demand. And hiring by the European banks or the UK banks in general is going to slow down in other markets as well. And we might see some rub-off impact of that as well.
Peter, you just indicated how S&P has come down and violated a critical technical level. If this weakness persists, how closely do you watch the emerging markets?
Should do? Should you wait for the markets perhaps from these levels to correct a little bit, because it sure looks like we're going to see a scenario like that sooner or later? Or, do you believe that this is a good time to look at some of those sectors that you mentioned, earlier on in the show, if you're in it for the long haul? And also, as somebody who invests in India, what are the other factors you think that are really going to come to the fore in the next couple of months?
Well, if you look at from the last time we had a crisis, which is the Lehman moment, from then to now, the Indian market, the Nifty that is, has returned about 3% returns. Dollar returns are actually negative. So meanwhile, the economy has actually grown, the GDP has grown. So it's not an overheated market. So do we see further downsides? Unlikely. But in terms of growth from here, I think the more the domestic companies, the domestic sectors, such as, for instance, PSU banking, we must thank the RBI for having cleaned up the bank NPMS, for government to infuse capital, and banks, PSU banks generally are now focusing on restructuring and cleaning up their books. And so this therefore mitigates the downside. And whenever corporate activity picks up, is the PSU banks, because they are the corporate-facing banks, not the private banks. They'll be the first to benefit. Second, beneficiaries of a fall in oil prices. If the UK economy slows down as a result of Brexit and oil prices come down, India, being a net importer, benefits. Of course, this assumes that the rupee doesn't fall too much. But however, the rupee is also likely to depreciate. So it's going to be a balancing act out there. 3, Indian factors. We've had 2 bad years of monsoon. This year monsoons are looking good. So the consumer as a sector is beginning to revive. Some of the export-related sectors are going to be impacted, i.e. sectors which have exposure to the UK, not the US bit, but they're all correlated in a way. And finally, I think we should focus more on domestic companies and domestic sectors.
We'll in fact leave it at that, all three of you, Chakri, Peter and Jan. Thank you so much for taking time out for us. We'll slip into a short break, come back, get you an opinion from a big domestic